All right, well, let's take a deeper dive as to how the market is moving today, what it means for you and your money. And joining me now is Pete Najarian, co-owner of Market Rebellion. Joining me remotely, Pete, it's good to see you this morning. And stocks trying to recover. What's your take of this inflation data we've got the past 2 days?
Yeah, the CPI certainly was, I guess, have to say it was definitely disappointing, and people were concerned about that. And then coming into today with the PPI, people definitely were wanting to see, okay, is this really something that we really need to be alarmed about? I think today gives them a little bit of relief, and that's why we're seeing this bit of a very quiet move to the upside, I would say right now. But I think the reality is, it's sticky. We've been talking about inflation being sticky. It continues to be so. And I think it's something that as we go through the markets and we look back a little bit, when we looked at the CPI down, as you mentioned, down over 400 points yesterday for the Dow, based upon those numbers that were released, I think what people have to do is take a deep breath. Now, take a little look over at the PPI numbers that were a little bit better maybe than expected, at least in some cases, or at least in line. And that was something that there was a huge relief. But that being said, in the past, we've had CPI numbers that have been very high as well. We've sold off significantly. And in a very, very short time span, the markets have recovered very rapidly. Call it a week, call it maybe a little bit longer than that. But the recovery process after these big sell-offs based upon some of the heat that's out there and the lack of cuts that people want, that I think is something that we're seeing playing out right in front of us today.
Does this change the overall direction for stocks? The fact that in the past 2 days or so, we have seen the expectations for rate cuts dialed back this year in the futures market.
Yeah, people are definitely concerned about that because everybody was basically pricing those in, right? I mean, at the very beginning of the year, we heard so many people talking about how many cuts we were going to get, anywhere between 4 and 6. And now people are all looking, and there's many folks out there that even are considering the idea, would we actually do a hike? Now, I'm not in that camp, but I certainly understand that they were projecting far too many cuts, I think, early in the year because we didn't see any sort of rational reasons behind that, especially with the stickiness that we've been continuing seeing when it comes to inflation. So very interesting the way the markets have been shifting around. I would also just like to point out when we're looking at these markets and we talk about volatility, you'd brought it up at the very top of the show. Volatility today started off the day actually looking like we were going somewhere close to 17. We're still sitting very high, basically year-to-date highs for the volatility index, somewhere close to 16. That's something I'm watching very closely as well.
Interesting. So in terms of not necessarily a major disconnect in terms of market trends, Pete, are there certain stock sectors that you like? Perhaps you'd be buying at these levels or even ones that you'd stay away from?
Oh, I absolutely think there are certain stock sectors out there right now that are hot, and I think they'll continue to be hot, particularly in energy. That's one of them. It's interesting because we always hear about just a specific 7 stocks, right? I think there's so many more stocks out there that are interesting to keep our eye on, and some of them that I think, quite frankly, should be in that list of top 7, maybe even top 10. But you look at over at the energy space, you look at the refiners, you look at names like Valero, not just at 52-week highs, but it ran all the way up to all-time highs and still very close to those levels. So I like energy. I like the financials. We're going to find out a lot about these markets as we get a little bit into tomorrow, especially when we start to hear from all the different banks. How do things look? One thing's for sure. I can promise you this. We've seen a lot more when it comes to the M&A side of things. That should actually feed well into the banks. That, I think, is one of the areas where people really haven't been watching as closely. We are seeing so many more in the M&A world that are $2 billion and above, and significantly more when you look at the 500 million and above. That, I think, is going to sit to a good side of the bottom line for some of these financials.
Interesting. So, of course, that earnings season officially will kick off pretty soon. We know with those big banks set to report. And by and large, it's been interesting, Pete, because we have seen corporate America holding up well, right? At least for some of these mega large cap companies, higher dividends, buybacks actually increasing of late. So even though inflation, is a concern, sticky and persistent. I think sticky was your word for the average American. It does seem like corporate America is holding up all right, no?
Yeah, no, I would agree with you. I think corporate America has actually done very well. I think they'll continue to do pretty well. It's just a matter of how hard is this going to hit the consumer? And we're looking at some of these numbers and we're going through those. And it's still something where I think you've got to we all have to admit from the consumer side, when you're filling up your tank is costing a lot more at the gas station these days. When you're out to dinner, you're paying far more, I think, than you have in the past. So there are some concerns about that. Are people willing to do the discretionary type spending, or are they just going to be doing the things that they need to do each and every day? So I think there's a little bit of a divide there, but certainly some of the numbers that we have seen so far, at least for now, are showing us just how sticky this really is.
Interesting. So in terms of gold prices at a record high, how alarming is that? You're right, we have seen volatility creep higher. I see it up today, but at a level of 16. So I think we still maybe have a little bit bandwidth there to go on volatility, but some have pointed out to me that gold price is right at a record high, with chart trends indicating that it is going to continue to rise, could be a downbeat sign for stocks.
Well, it certainly could be, because, you know, why are they going to gold? Well, they're going there because they're trying to find somewhere where they feel some sort of security. And that has been something that's been driving things. And certainly there's been a huge demand for gold, driving those prices up, along with copper, along with a lot of the various commodities that are out there that people are looking at. So I think there's a lot to that. Are they completely leaving the stock market? Absolutely not. As a matter of fact, the one thing I would point out to you, stock market volumes, they don't really look as great as they once did. I will tell you, on my side of the world, in the derivatives world, yesterday we traded over 48 million contracts. We're averaging about 48 million contracts so far year to date, which is up about 4 million per day from last year. So again, we are seeing a lot in the derivatives markets where people can have that leverage, and we're seeing those volumes absolutely explode to the upside.
What is the option market telling you? I know you follow that pretty closely at your firm.
Yeah, absolutely. Well, you know, it was interesting yesterday. The markets were selling off. Obviously, everybody feels like they're all going to duck and try to cover somewhere. We were seeing a lot of call buying in a lot of various areas. We saw it in the semiconductor space. We've seen it in other areas as well. So there really wasn't that fear factor that you would expect for people to have. They were going in, when I say it's the larger buyers that I'm talking about, were going in yesterday, and there was quite a bit of call activity yesterday on a day where you'd expect for the puts to absolutely dominate the session. That's not what happened yesterday. The calls were very, very active, and some very large option calls being placed in certain parts of the market for sure.
Okay, and trading volumes. I know a lot of money still on the sidelines, Pete. Any indication from trading volumes what that might mean?
Yeah, I think it does mean something. I think that folks are, you know, there is that tentativeness that we always get when we get into April, tax season, all of those kinds of things. There's a lot of excuses we could throw at it, but the reality is that I think people had sort of taken a back seat for a moment because of the fact that Q1 was outstanding. We all know that. It was an incredible move to the upside. And would there be a little bit of a break? I think that's where we are right now. I think obviously the concerns looking forward would be, where are the treasuries? Where is the 10-year? Right today, still above 4.5, so extremely high, relatively speaking. That's something I think that people are definitely watching. They're watching that. They're looking at other areas where they might want to allocate some funds. You mentioned gold. That would be a great one. Silver's been on a move to the upside as well. So they're trying to find ways that they can still navigate within the markets, be involved in the markets, but not quite as deep as they once were when it comes to the semiconductors that have kind of flatlined for the last month or so.
Do you think the Fed chair is going to get it right? I think people look at his track record, called inflation transitory in September of 2021, that embarked on the steepest rate cuts that we've seen in decades. And now, obviously, in the past 6 months or so, we've seen a lot of movement in terms of rate cut expectations as inflation has remained stubborn. Are you confident that Fed Chair Powell can navigate through this?
Well, I was more confident probably 2 months ago, but I still have some confidence, absolutely, that there's the possibility of that. What I like to look at is the fact that he has been very transparent. I've talked about that for a really long time. I heard all these people saying, well, we're going to get these 4 or 5 or 6 cuts maybe this year. I'm not really sure where they could pull that out of because we didn't have the data yet. And he's been talking about the Fed is going to be data dependent, and that's exactly what they've been. So I think he's been a man of his word. I think the Fed has done a really good job of trying to navigate this. I think this last mile or so, that's where it's gotten pretty difficult, and we are still a long ways from that 2%. So they've still got their work cut out for them for sure.
All right, Pete Najarian, co-owner of Market Rebellion. Pete, thanks for joining.